regarding people's future health care. And because you're mediators, it's especially important for those going through any kind of separation or divorce. So listen up. Anyways, welcome to My Dignity. And as you can see, your care, your way, because you can pick the care that you need. Okay, let's start with looking at some of the realities that affect divorcing couples. Okay, so couples are typically losing their primary health care advocate, their partner, when they can no longer care for themselves. So who's going to take care of them when they can't take care of themselves? Adult children, well, might be asked to share in the expense of caring for your parent, whether they're ready or not. And I don't think that's where people want to go. And I don't think kids want to be in that position. So it's not only important to minimize the divorce impact on kids, it's essential for both parties to have a strategy for their own future health care. Because if they don't have somebody or a plan in place, they're hooped. Now, couples going through a divorce need to consider also the responsibility of care for their aging parents. If they were married, okay, and one of the parents became disabled or infirm or wasn't able to care for themselves, isn't that their responsibility? And also you got to consider dependent siblings, okay, who might need the assistance on an ongoing need. So when you're looking at assessing needs and allocating assets, also another important consideration. And this PowerPoint will be available to you, okay, for some of these points, which you all know about anyways, but these are things that should come to mind. What about discussion points for mediators now? We went through the divorcing couples. Well, we all know that life insurance is a given when it comes to divorce agreements. But it's pretty easy to overlook future health care. And you realize that following a divorce, both parties, unfortunately, have a smaller pool of assets to fund many things, including their future health care expenses. Even for the higher earning party, a healthcare event can impact the ability to meet their spousal maintenance and child support commitments. It's worse for the lower wage earner, okay, because they have less to deal with, okay, as far as assets, and it can create greater financial hardships. As we all know, okay, women, unfortunately, more often than not, are on the losing end. Well, it used to be the case anyways. Why? Well, when it's important for them, okay, when you're considering care options, because they live longer than men and will need care longer than men. Unfortunately, this is a statistic, I'm not up on it, but they say women's standard, pardon me? Women's standard of living is likely to drop following a divorce, while a man's standard of living is more likely to increase. I'll go along with that. Has anybody considered gray divorce for those that are 50 and up? Okay, this is very important, okay, for their future health care, because older people, unfortunately, are more vulnerable. They're going to get sick faster, and the government assistance continues to be very limited to them. So let's go into it. Let's take a look at risks in people's lifetime. Losing a home to a fire, that's 1 in 1,200. That's how many people will suffer a loss. How about having a car accident, 1 in 240? Well, if you do the math, that's 0.4% of people that will experience a car accident, even though we hear about it quite often and rates keep climbing. These are two types of insurance that people are mandated or committed to buy. Home insurance, you need it for your mortgages. Car insurance, you need it for the liability. So what about needing assistance when you can't take care of yourself? Check out this statistic. The actual number is 74% of people 65 and over will require some form of future care when they can't take care of themselves. So now that I've said a little bit to stimulate you, I'm going to stimulate you more and present a little video that lays out the landscape of the long-term care situation in Canada. It's about 5 minutes long, okay, and it better explains the current state of affairs affecting Canadians, okay? And it also supplies some workable solutions, i.e. My Dignity, that's available, okay, and things that have to be considered when doing mediation. So grab your popcorn, okay, and listen away.
Whether we like it or not, we're getting older as a society. The prospect of an aging population has been with us for a long time. And although aging in Canada has evolved almost exactly as projected, the outlook is still somewhat shocking.
In the coming decade, there will be more than 8 million Canadians over age 65. For the first time, there are now more seniors in our country than children under 14. 90% of people over 65 are currently living with at least one chronic condition, and many with more than one, like diabetes, cancer, and heart disease.
As Canada's population ages, these chronic conditions will require even more focus. The number of Canadians currently on wait lists for long-term care facilities is still in the thousands, with no end in sight. Many Canadians think that the obvious solution to an aging population is to rely on the government, not appreciating they are merely a recipient of limited care with no control over who treats you, when you receive care, and what services are provided.
There is nothing personal about publicly funded home care. It's all about how the individual, the person in need of care, fits into the system. Most of the time, there is a gap in the amount of care that is delivered. And so families are in the situation where they're filling in the gaps.
Further, government-funded home care services are becoming increasingly more restrictive every year and mainly addressing the more acute, short-term medical needs, leaving the less urgent but no less important activities of daily living assistance to informal caregivers. Informal home care assistance provided by family is not a minor commitment, averaging 20 hours of dedicated care per week, often resulting in signs of distress, anger, and depression. So, if long-term care facilities are overburdened and difficult to access, and the government will not look after us, where do we turn for those of us who will be reaching that eventual stage of infirmity? You can actually insure yourself and your loved ones for the unknown health support you may need in the future. It's called My Dignity Home Care Assistance, and many Canadians are relying on this very viable solution.
My Dignity is all about the person. It's a policy that the person can determine how, when, where, and what kind of service is provided to them.
My Dignity home care coverage can provide benefits such as personal support workers, home conversion expenses, meals, transportation expenses, health monitoring systems, medical supplies, wheelchairs, physiotherapists, and a host of other services depending on the policy you select.
It's person-driven care as opposed to systems-driven care.
A policy that leads to peace of mind, all procured with no medical checkup, just a simple questionnaire. Your care, your way.
Independence has always been important to my wife and I in other parts of our lives. And the My Dignity service And what it provides allows us to continue to practice our independence by living in our own home.
As a caregiver, as well as a healthcare professional, seeing needs from both sides of the system, I would definitely recommend people invest in a My Dignity type plan for financial security, for peace of mind, and knowing that those resources are going to be needed at some point in the future, possibly even sooner than you might think.
In our own particular circumstance, I reckon my father's care on the first 2-year average was about $122,000. So in my personal family's income tax bracket, that meant my parents needed to liquidate some $200,000 just to ensure that my dad was safe.
I am glad I accepted it, and presently I'm introducing it to my family and my friends.
I've already referred people to My Dignity who are friends of mine or business associates.
A policy that leads to peace of mind, all procured with no medical checkup, just a simple health questionnaire. As all the facts and figures of our aging population are analyzed, pondered, and fretted over by millions of us, there's a simple solution to at least ensure that we can be looked after when we can no longer look after ourselves. So take time to prepare now and secure your dignity your way.
Well, there we go. Okay. So anyways, it really shouldn't take a pandemic, which we're all living through, to wake people up to the fact that bad things can happen to anyone. And believe me, it can happen overnight. Because simply people don't want to be alone, nor do they ever want to die alone. So just to reiterate, people need a strategy to plan for their future. Now what I'm going to do, I'm going to turn the microphone over to my partner in crime, Cynthia, and she's going to go through some of the options and details of the plan. So anyway, Cynthia, please take it away.
Thank you, Miles. Hi, everybody. So what options are available to us as Canadians, and specifically Ontario residents? They're limited. The reality is they're limited, and even more so for divorcing spouses. So we have a very big job ahead of us to empower people to begin addressing this situation. Now, what are the options available to us in our time of need? Well, we can rely on the government. That's an option. And some people think that, you know, the government is there from womb to tomb. However, I think the media has done an extremely good job as of late of educating people as to why relying on the government or the system is perhaps not a very good option and not in their best interests. Really, people should be left feeling that they should have a strategy of their own. And that's where we come in as educators, yourselves as mediators and counselors, where you need to empower people not to be at a mercy of the system. They just don't know what their options are, okay? And so it's our job to help lay out, you know, what the options are, and being at the mercy of a system is generally not the best option. Now, another option that sometimes people have no choice to rely on is family, friends, or adult children. Again, because they don't have knowledge of what options are available to them. And so sadly, this becomes the reality, even though people truly don't want to be a burden to their loved ones. I mean, it's not good for anyone. These people have lives to live, jobs to go to, and they don't know how to be caregivers. So another option where most of us, I think, fall prey to is denial. We think that it happens to everyone else and not ourselves. So we need to again stand up and take charge and come to grips with the fact that most of us are not going to die in good health. In fact, at the time of life when health circumstances change, it in fact becomes one of the most expensive times in life. And you want to make sure that you have a dignified way of dealing with that, and that your clients have a dignified way of dealing with that. Now, the other option that's available, and maybe a very intelligent option because it's really pennies on the dollar, is to have a strategy or a policy that provides resources to help fund the care. Because without a plan of insurance, what you're actually forcing people to do is to liquidate very expensive after-tax dollars. And in my experience as a geriatric specialist and now educator to the nation about the need to have a future healthcare strategy, I found people making, at this time, without a plan in place, making the worst decisions in their life, and then having a very difficult time of getting out of that, and then dealing with all the implications of the anxiety and depression that follows because this wasn't thought out in advance. So what we really want to do is help people to preserve their wealth so that they have a plan to fall back on. Now, prior to the pandemic, back in October of 2019, there was a very poignant Globe and Mail article that addressed the fact that the cost of publicly funded care is going to triple in the next 30 years, from 22 billion to 71 billion. If they're not doing a good job of it now, I don't see how we're going to do a good job of it in the future. So people must own up and take responsibility for themselves, because what we don't want to see happen, because this is what's happening, is that the burden of home care falls 75% of the time on families. Families who aren't equipped to deal with these issues, that don't know how to be a caregiver. Families would rather be the manager of their loved one's care and preserve everyone's dignity. So that's the whole point of what we're trying to bring forth and to help people be educated about the options. Now, so realistically, people will probably gravitate to relying on these two options. And one is to rely on the government. Okay, you can certainly do that. Or you can be in the driver's seat and have a plan with insurance. And I want to take you through a comparison of those choices. So if a person hasn't thought out their future care strategy, what's going to happen is they're going to be a recipient of care. You have absolutely no control over who treats you. You know, it may not be culturally appropriate or gender appropriate, but you don't have a choice over that. Nor do you have a choice when the care is going to be provided. If you're an early riser and your government personal support worker doesn't arrive until the afternoon, you've lost half a day, and quality of life is impacted. And furthermore, you don't have any control over the services that are being provided, which are largely just custodial, bathing and dressing. Now, when you've thought your own care strategy through and made yourself a consumer of care by having a policy, you are in the driver's seat because you have 100% control over who you would like to hire as your caregiver, somebody that you like, that's qualified to know how to help you get out of the bathtub when you can't get out of the bathtub yourself. Okay, you'll be able to decide when that person is going to come and provide the services that you require, and you will decide what those services are, and not just be limited to the benefits provided by the government, which are largely just custodial. Now, most people recognize in order to qualify for benefits in the system, probably there's going to be an assessment, right? Definitely there's an initial assessment, and people would expect that. But what people don't know is that that assessment is ongoing by the healthcare professional that comes to make those determinations. And it's very possible that a person's assistance can be declined or reduced, especially if someone else in the community has a more serious problem than they do. So all of these services that they were relying on can very realistically come to an unexpected halt. Now, that's not going to happen if we do our jobs properly and make sure people have a strategy or a plan. Because with the insurance plan, the benefits are actually available immediately. There's no waiting period. Once a person's general practitioner, their own doctor, has signed on a claim form that the person has a physical issue or a cognitive issue and needs assistance in their own home, the benefits become available. Now, from the physical point of view, the doctor is actually signing on a claim form that a person can't do 2 out of the 6 activities of daily living. They can't transfer themselves, bathe or dress themselves, can't go to the washroom with good hygiene, or they've lost their bowel or bladder continence, or they've lost their inability to feed themselves. It doesn't matter how a person gets in that situation. It doesn't matter if they've had a surgical procedure, a fracture, they've had a serious illness, or maybe they just get frail over time. What matters is that can the doctor sign on the simple claim form that the person is having physical or cognitive issues and it's time for care to begin at home. So that's how the benefits, particularly for the home care part of this policy, are triggered. Now, when we look at assistance from the government, I think I kind of alluded to this earlier, naturally, there is no support for what they refer to as instrumental activities of daily living. These are the activities that truly, make quality of life worth living. Who's going to do the laundry? Who's going to do the grocery shopping, the meal preparation, the cleaning, the yard work, the bookkeeping? So people don't think about these things. And unfortunately, when you're faced with an event and you have no plan in place, it can be absolutely devastating for families, not only emotionally, but financially. And it doesn't need to be that way if we all do our jobs well. And I know we will going forward. So when you do have a plan with insurance, for sure, you have the flexibility to direct your care however it is that, or whatever it is that you may need, whether you need to go to doctor's appointments, or you need assistance in your home, or you need assistance with bathing. Whatever it is, your person is there for you, and you have the resources to be able to pay for that from your insurance policy. Okay, so My Dignity Home Care Assistance Plan. You see the focus is on home care. Well, there's a very, very good reason for that. The conventional long-term care insurance Canadian industry climate didn't do a very good job of preparing policies for people in their time of need that would fund their care. In fact, there's only one carrier and ourselves left to take care of this job. And one of the reasons we've come to be and we focused on home care is that 50% of the people who would apply for a conventional long-term care policy would be declined. And most people were not able to afford it. And they would be applying at a time in life where many times their health circumstances were failing them. So it became easier for an underwriter to say, no, sorry, we don't want you, as opposed to an underwriter to say, let's see, can we work with this person? So understanding that void in the system is what motivated us over a decade ago now to create these home care assistance plans. Because if you ask somebody, where would you like to be cared for? Most people are going to say, and especially now with all the media presence and the terrible things that are happening in long-term care facilities, people are going to say, I want to be in my own home with my loved ones around me, my familiar surroundings, because naturally the care is going to be better. It's going to be 1-on-1 versus 1-on-10 in a long-term care facility. I'm also very proud to say that you'll notice the CARP recommended logo in the middle of the slide. Canadian Association of Retired People is one of our large clients, and they very much endorse what we are doing for our society and our nation. Now, let's talk a little bit about what the coverage is and how it works. So we know the focus is on home care, but each policy actually comes with 3 levels of coverage. Of course, we know that one of the most important levels is home care, the flexibility to choose those benefits that you need when the time comes that you need assistance at home, truly making it your care, your way. And I'll speak to what some of those benefits are momentarily. The second level of coverage is a supplemental hospital plan or health benefit plan, because at a time in life when people are considering this kind of planning, it may be that they've lost their extended health care plan through their employer, or they can't afford to maintain that anymore. So it's very nice that the policy has that value-added little mini health plan to help offset some of those costs that OHIP does not cover. Also, the plan comes with a family support program so that people have a resource to reach out to ask various medical and legal questions. This program also provides all kinds of free benefits for people when they return home from the hospital. They get free housekeeping services, their medication delivered for free, Lifeline, which is the buzzer system that goes off if you've fallen down, can't get up, somebody comes. And it also helps cover off costs for family members and friends that are coming to visit you once you return from home. So there's a whole host of benefits, including, free psychological support. As of late, we have a lot of our clients calling into the call center for issues associated with anxiety regarding the pandemic. It also provides for medical second opinions so that people, when they have been diagnosed with a serious illness, and of course it's a very distressing time, they have a benefit here where they can actually readily have access to a qualified medical second opinion so that they're not running around in their time of duress trying to source these things out. So there's a whole host of additional free and support benefits that come with the coverage, including various discounts at service and product providers around the province. So just by virtue of the fact that you're a policy owner, you get additional benefits that the normal consumer would not be privy to. So it's a really value-packed program. Now, the insurance policy comes with some choices. The choices are the different benefit amounts that are available. So there are 2 benefit amounts available to people under the age of 55, 50,000 tax-free dollars or 100,000 tax-free dollars. When I'm talking to people, because now it's all, most of the time it's a non-face-to-face situation, I help people create a visual of how this really works. And I talk about this like a virtual bank account or a line of credit that never has to be repaid, so that they can actually visualize that they've got some dollars earmarked for their future health care when that time comes. And that gives people peace of mind. And it also helps them to understand how it works. Now, in Ontario, if you are 55 and up, you actually have the privilege of 150,000 tax-free dollars, which is to be allocated toward one's future health care. That's significant. If you think about a husband and a wife, or even parting partners, 150,000 for him, 150,000 for her, that's 300,000 tax-free dollars that's allocated to that need going forward. And if you had to start liquidating your expensive after-tax dollars, depending on your tax bracket, that could be upwards of $500,000. People don't need to be in that position. Now, I mentioned earlier that the home care assistance plan covers a number of benefits. Okay, there's very specific benefits for services, supplies, and equipment for care at home. Now, one of the biggest and I think most important benefits that the plan helps people cover off the cost of is the labor costs, the ability to have dollars to pay for a personal support worker. So when people have 100,000 or 150,000 of coverage, they can actually be reimbursed back 35,000, just under $35,000 for these labor costs, for being able to pay someone to come into their home and properly care for them. That's a very significant benefit. Also, people might use the policy to do some home conversion, because there's up to $25,000 that you can use to get things like raised toilet seats, ramps, bars in the bathroom, a walk-in tub, a chairlift, all of these kinds of things that will help people live a better quality of life independently longer in the comfort of their own home. Other things that people will claim are meals. So you can order meals from your favorite restaurant or from a service that prepares the meal for you outside of home. It will cover off transportation expenses to medical appointments or wherever it is that you have to go, and various health monitoring systems and all kinds of medical supplies and equipment that OHIP doesn't provide for. Even, paramedical services up to $2,750 a year for physiotherapy, occupational therapy. Those are significant. These are really true insurance benefits. And also, with respect to the hospital benefits, the plan will help cover off semi-private or private hospitalization rooms, convalescent hospital, ambulance, air ambulance, MRIs. Even though OHIP does cover it, it gives people the freedom to go and have an MRI done on their own timeline. So any of these benefits here can be utilized with the policy. So truly giving people the flexibility to choose your care, your way, bringing dignity back to the people. Now, the home care assistance plan is easy, I think, to explain and very easy to obtain. We're going to look at a rate chart in a few moments, and you'll understand how affordable it is. Okay, easy to obtain from the point of view that there is no medical, there's no prodding, no peeing in a bottle, no blood required. It's a matter of a simple health questionnaire, and if a person can genuinely respond favorably to that questionnaire, it's an automatic approval, bringing peace of mind and, of course, a valuable solution for people's future health care. Now, one additional and interesting benefit, the plan has a very clever design, as it actually is a PHSP, which stands for Private Health Services Plan. So it's an expense toward the medical tax credit for individuals or a deduction for business owners. And any way that the policy is placed, benefits are not taxable. So that's an even additional attractive feature of the plan. Now, I mentioned we would look at a rate chart. The rates are based on an age that the person is at the time that they buy the policy, okay? So we've shown some examples here of people ranging in age from age 30 to 54. This plan is actually available for purchase up to age 80. And of course, if you recall, I mentioned after people turn 55, you can buy an additional $50,000 of coverage, giving people $150,000 tax-free dollars for their health care. But if you look at let's look at the premium for somebody aged 54, okay? So for the $50,000 and the $100,000 benefit for a male for $100,000, it's only $68.55, while the female is $81.48. I think Miles just wanted to jump in and make a point here, so I'm just going to let him express what you wanted to say.
So sorry. Basically, I believe a lot of the people getting divorced are younger. So if you look at the younger ages, you'll see it's even more palatable. Back to Cynthia.
Thank you. Good point, Miles. But also, we do see an increasing incidence of the gray divorce as well. Okay, so oh no, I can't be at my end of my presentation already. That just went a little too fast. But anyway, we'll have more time for questions. Clearly, this little funny, nobody wants to be taken by surprise. And that's why we have a very important responsibility as educators and counselors. And I'm proud of our association with Kevin, who's your insurance guru. Kevin is a valued partner of the My Dignity Healthcare Solutions platform, and he would welcome consulting with you on cases to help you achieve a viable settlement so that people have a preparedness when health circumstances change, because they do change. So
Sadly,
if we can go to questions now, that would be great.
for sure. I had a question about the difference in rates between males and females. I was
Yes.
interested why females were higher than
Thank you.
males. Yeah.
Yeah, I actually wanted to address that. Unlike life insurance premiums, where women pay less because we live longer, we pay a higher premium for a living benefit. We have
Okay.
more time to utilize it.
Okay, that makes sense. Okay, I was wondering if it was about, women maybe being more likely to reach out for care, and I wasn't sure what it was, but that makes sense. More time to claim.
Yeah.
Okay.
From an actuarial point of view, yeah, it is a mortality issue that we live longer, so naturally more of an opportunity to make use of those kinds of living benefits.
Right. If you stop sharing your screen, then our little pictures will come up a little bit bigger. If people want to unmute themselves and talk, then they can. I'll just put it like this. And then another question, what about premiums for older than 54, sort of 55 and up? How do they compare to the ones you showed us?
Well, basically, we can always send people a list, and Kevin, I believe, has that information. They're more expensive, but they're not going to break the bank until you get to be a little bit older, like around 75.
Okay.
And there are divorces at 75, believe me.
I know, yeah.
They're just waiting for the kids to die.
As an example, let's say somebody's on a budget and they're age 80 and they decide that they want to create a cushion for themselves and their family, and they decide to purchase a $50,000 policy. So for a male age 80, the premium is less than $150 a month.
Okay. And is this something that a family member could someone like me buy it for my mom? Is that the idea?
Sure. Yes, we see that trend as the nation becomes more familiar with the fact that we do have to take responsibility and that there are options that are sensible. We are starting to see a very significant trend where people are buying these policies for their folks so that they can be what they're supposed to be, and that's the manager of the care, not the caregiver, because people aren't trained on how to care for somebody who needs assistance.
Yeah.
That's a lot of pressure to put on a family.
Oh, for sure. And I think that, when we think of caregiver, a lot of us have taken training in elder mediation, and we learn about caregiver burnout, and, very shocking to hear that the caregiver often, their life ends prior to the person they're caring for, which is even scarier. Not even, by separation is the person losing their caregiver, but also by predeceasing someone who's got high needs, and the stress is so high.
Yeah, it happens a lot.
I'm really glad that you brought that up, because that is, until people start doing this kind of planning, that is definitely going to continue to be a problem, and it's been a problem for years.
Mm-hmm. Yeah, it's interesting. And so feel free to unmute yourself if you have questions, or just, I'm also looking at the chat too. Another thing that sort of struck me is, so you said there's no waiting period for these benefits.
That's right.
It seems almost too good to be true, right? So if I bought a plan for my mom tomorrow, what are the questions she would be asked about her health? Is it, do they have to be sort of like Wonder Woman health status in order to get a plan at age 74, for example?
that would have been the case if you would have been seeking a conventional long-term care plan for your mom. The procedure there was something like this. The application was about 25 pages long. You sign authorization to allow the insurance carrier to access your medical records, including the doctor's clinical notes, where, you know, we don't know what they're writing about us. Many times it's not even accurate. And not only do you have to do the application, there might be some medical requirements like urine or blood tests, vitals. And in addition, they also do a cognitive assessment to ensure that people are not having trouble with their memory.
Yeah, and that's from people that really don't even understand the questions they're asking because they outsource it.
And so what would it look like for the general, like what would it look different for a 50-year-old versus a 74-year-old or 75-year-old? The questions, or would it be the same questionnaire?
It's the same questionnaire. And essentially, as long as you don't have a significant health situation and you're not an insulin dependent diabetic, you most likely will qualify as long as you are reasonably healthy and independent. You know, we have a 95% approval rate, which is, you know, it's really a gift to Canadians. But as you can see, I mean, it's not Lotto Max, right? There's a limited amount, and all of the parties have been thoughtfully looked after. You know, the insurance carrier has a finite amount of risk. You know, the insured also has, you know, a limited amount of benefit to utilize. So it's been, I think, well thought out. And after a decade of working with this platform and seeing all kinds of claims now, the biggest complaint that we get at the end of the day was, we wish we could have bought more.
Yeah. And so that amount, that 50, 100, or 150, is that over the lifetime for the person?
At this moment in time, that is the present maximum. We are always advocating and working with the carriers to try and elevate that. I mean, we are perfectionists, and we see this gap that we have as a society, and we are working very hard to try to rectify it.
To increase it potentially.
Yeah.
Can someone, you know, use those dollars for long-term care solutions, like private long-term, like retirement homes, or is it this limited to in-home?
The focus of this particular plan is home care in one's own home. You know, people, when they have a choice, would prefer to remain in their own home. And furthermore, there's a significant waiting list for long-term care facilities, because there are times when people will need that option.
Yeah, I know, a retirement home, like some people do move, to other homes, but as long as it's not considered a long-term care facility, it still works.
It
so
still
they
works.
might be in a senior type of community, etc., where they have some care, but it's not considered a long-term care facility. They might get their meals prepared and somebody to help them with their medication or something.
So the key is the 2 out of 6 of the normal activities of daily living need to be completed.
That's for physical. That's physical, because you can also be cognitively impaired. You start to lose your marbles.
Right. Yeah. Yeah. Okay. Excellent. And that was the question about the. So, if 74% of people over the age of 65 require some sort of assistance, how can the insurance companies afford to provide these benefits? Like the math to me is a little bit, like I worry about it, because I think, oh, is the claim not going to be accepted?
No, it's simple, okay? It's like a pension plan. How can the company afford to pay your pension out when you're only throwing so much money in? It's got to grow. So there's a pool. But basically 74%. Now out of the 70, some people will die. Some people will go straight to a nursing home where it won't pay out.
Right.
Okay. And the insurance company retains the right to increase premiums. It's never been done, but they can increase the cost of the premiums to help fund it, because yes, it's going to happen. But for now, There's no other option available that makes sense, okay? Because it's very affordable and easy to maintain.
Right. And what do you think of, when I'm watching Premier Ford talking about investigating long-term care homes, do you think that's going to have any impact on long-term care? You mentioned that, the cost is going to go up just as the population's aging. And if the government is looking at making improvements, do you think that it's possible for people to expect the government would be able to support them in a better way in the future? Or
I don't know. I will throw that question out to everybody. The government cares about you collectively, but not about you individually. Okay. I personally, I have my doubts. Okay. I mean, look at the figure that Cynthia brought up. If they can't do a good job now at 22 billion, okay, what are they going to do when it's 70 billion and everybody is aging rapidly? It ain't going to happen. You got to be your own advocate. That's what I think.
Yeah. What do others think on the call here? Does anyone else want to weigh in on?
I have a question.
Go ahead, Sophia.
Hello?
Yeah,
Hi.
go ahead.
Oh.
Sophia. Yeah, go ahead.
Yeah, is coordination of benefits between with other insurance companies allowed?
No, there's no coordination of benefits involved here. This is an independent situation, which is a good thing. Okay, because it is different. You're thinking of a health plan where there's coordination of benefits, where one spouse has coverage, another spouse has coverage, and they can share, okay, because let's say two employers are paying for the premium, and they can share readily and sort of top up what they missed from one of the plans. This is a separate situation. So
Right, but I've come across insurers who do also offer home care as a part of your insurance plan.
not like this. Not like this.
Okay. No, I understand yours is different.
They're very limited. Okay, so they might offer 1,000, 2,500 a year. Okay, well that doesn't.
Right, I understand that. I'm not talking about the limits.
Oh.
I'm asking whether you would be able to coordinate whatever your amounts are with your plan, if you already have that included as a part of home care included as a part of your insurance plan. Would it be coordinated with your plan?
Yeah, when this comes up, and it does come up from time to time that people have extended healthcare plans, definitely we counsel people, Sophia, to use those first, okay, because the My Dignity Home Care assistance plans are a finite lifetime benefit amount. So if you can get some benefit elsewhere, by all means, use that first and then lean on My Dignity policy.
Sorry.
Okay.
Very good question. Thank you.
Yeah, it's a good one.
I get, oh, sorry, go ahead.
Oh, no, go ahead, Vicki.
I guess the question I have is, I'm mulling it over in my head. I mean, certainly as someone who's aging myself and having, a mother who's getting older, fantastic information to have. What I'm trying to think about is how it would apply to family mediation. I mean, certainly I see how it could be applied to the elder mediation. As it relates to the family mediation, do you see where it may have some input into what we might be mediating?
Well, it's all about care, okay? Is care a consideration? Because you've lost your spouse, they're supposed to care for you. Like just this morning, we had a young man that suffered a stroke, okay? Bad things can happen overnight, okay? And as Cynthia mentioned, people can have an illness, they can have an accident, they can have a fracture, okay? And they might need some kind of care, okay? It might be temporary to start with, it might be 2 months, 3 months, 4 months, especially after an operation, etc. Let's say after somebody gets cancer and they're home and they're recovering, okay? Well, they're gonna need a lot of care. So there's those things to consider, okay? A lot of our claims are short-term, okay? And a lot of them involve younger people.
Sure. So maybe where we're talking about benefits, when we talk about, when there's been a marital separation and we're figuring out the benefits and how they're going to get covered, whether or not this gets discussed as an option, if there's, first of all, if there's current coverage and how that's going to get paid. But if there's concern on a move forward basis, then having a fulsome discussion about that under the benefits section of what we cover in mediation.
I'm thinking along those lines too, Vicki. I think, in some mediations, there's a stumbling block of, there's a fear of how you're going to move on. The person feels very left and very alone. And something like this could, if you build it into a support payment, for example, this portion, will be added to the support, or maybe the support's increased by this amount from the low to the mid, maybe, to pay for this item, so that there's not the fear there of being alone and not having the support of the other person. It could help maybe with impasse in that area. I'm mulling that over too in my mind, Vicki.
If I can just add, just for a moment, I think to Vicki's point, I think it's how to bring it up, how to ask, and to ask the question. I might even go as far as to ask the mediating spouses if, will they have, or do they expect to have responsibility for their aging folks? Is that something that has been addressed, in the family?
Yeah, that's another idea, is to think about all the stress that the couple has and try to mitigate it by getting insurance to help that. And I think there's another question, does the length of time that you pay the premium impact how much benefit you're eligible for if you need assistance within a few years? I think the answer is no to that one, right?
The answer is no to that, yeah.
Okay, okay.
Yeah.
And
benefits are available immediately as soon as you trigger it. And in fact, the hospital benefit and that little mini health plan and the free assistance support program are all things that are available from day one. They don't have to be accessed because you can't do 2 out of the 6 or you're cognitively impaired. There's no trigger for those benefits.
Okay, that's super interesting. And I have 2 questions. One is, the 50, 100, or 150, can you use 25 of it when you're 30 because you broke your clavicle, and 50 of it when you're, I don't know, 70? Okay.
Yeah, definitely.
Yeah.
Okay, so
it's like that pretend bank account that's earmarked for that time when you need assistance, and the benefits aren't covered by the government.
And
so, of course, only if you keep paying your premium.
Well, when you trigger a claim, okay, waiver of premium was actually built into the premium. So if you can't do 2 out of the 6 or you're cognitively impaired, your premium is waived from the date of that event.
Wow.
But if you're just using the health plan, it's a normal health plan. It's a mini health plan that's attached to the home care assistance plan. So if you're using just the health plan, okay, for whatever benefits are there, the premium is not waived, as it is not with normal health plans.
Okay. What's really interesting to me is, in this time of anxiety in COVID, you mentioned that part of the mini little health plan thing was some counseling, and counseling is very expensive and not affordable for many people. Is it conceivable that someone could sign up for a plan like this today and have counseling? And what would that counseling look like? Say I needed counseling for anxiety. What would I be able to access?
Basically, I believe per event. So per event per year, okay, you get up to, I think is it 15?
12 hours of psychological support.
12 hours.
Yeah. They generally cap it at $1,000. So for instance, somebody's lost their spouse, a traumatic life event, right? That would be a triggering event that would permit somebody to access that free psychological service. And what I've noticed dealing with a lot of the claims is that it's capped at around $1,000.
1,000.
Per event.
So have you noticed some claims going in for COVID-related anxiety?
Yes.
Okay. Because really, that if you have a client who can't afford counseling, you know, it seems like if they were in their 50s and they were, you know, they could get a package that would give them some instant relief or access to and it's psychologists that do the therapy, or?
Yeah, and in some cases, the insurance carrier has allowed people to, if they have been seeking counsel from various advisors in the past, sometimes they've actually permitted that person to utilize the services of the person that they're comfortable with.
Okay. And what about mediation? What about for marital separation, the stress that's related to that? Has anyone ever successfully made a claim to pay their mediator using the program, or no?
Not to my knowledge.
Not to my knowledge, no.
I've been working on that for a while, eh, Kevin? Yeah. I don't know why. I don't know. Well, you know, I think it's something that, you know, the College of Massage Therapists worked really hard at, and finally got that added. I mean, I think that it is a real stress reliever for families. I think, anyway, if I could plant a seed, that's the seed I would plant. Also, a cost saving to all organizations to have mediation as a less adversarial alternative to conflict resolution and creating less stress for children and families and all sorts of good stuff.
How about mediate a burnout?
Or well, that might be covered under like needing some psychological support due to, yeah. If you have mediator burnout, Age, we'll talk about that at our next Mediation Matters, which is will be more normal.
Not yet, otherwise I would quit.
Yeah.
Better hurry up and get a policy.
I think I do, actually.
Yeah. All right. Any last words for us? We're just coming up to the top of the hour. Any last questions? I think I've asked them all from the chat.
Well, we just wanted to thank everybody for participating, and please, refer to Kevin if you have situations worth mentioning or trying to open up a dialogue. But like personally, I think it's a win-win because, as we mentioned, people automatically look at life insurance as part of the settlement agreement many times. Well, yeah, they're going to die eventually, but if it's 40 years, okay, from the date, that's a long time to carry something, okay? Yeah. I mean, is the debt or the obligation already done with? Getting sick, you can't pick and choose when to get sick, etc. You can't pick and choose it.
Yeah. I think, and I really wanted to emphasize the point about it being a medical expense or, something you could write off as a business expense. That makes it even more affordable. I think that really caught my ear when you said that. So I'll have to look into that more. So thank you so much, Miles and Cynthia. It's been a pleasure. I really enjoyed learning about this. I wanted to hear the nuts and bolts, and you gave us those. So if anyone would like a copy of the presentation, you can email me directly at director@oifm.on.ca, and I will send it to you after Miles and Cynthia send it to me. And we will talk again shortly. Thank you very much, everyone.
Take care, everybody. Stay strong.
Just remember, better 6 feet apart than 6 feet under.
On that fun note, thank you very much. Thanks, Kevin.
Thank you.
Bye. Bye. Bye.
Okay, bye-bye.
Bye.